Okay, so we've been asked the question, NIHD is making lower lows and lower highs. Would you consider this to be a shorting opportunity? And I've talked about, and I have a big video on this, about shorting the front side of a move. Now, intraday, this stock has this pop up. When we had it on our watch list this morning, we said over 624, 750 is the target. So this was the entry level here. When it broke out, traded up as high as 723, so just 25 cents short of our target. Pulls back sharply. Looks like it's going to make another run at it, makes a fake breakout, and then starts to roll over. If you were looking to short this stock intraday, this was the level to do it, when it double topped and then rolled over. Now, if you're looking to short it, this is a chase down. We don't know where this is going to end. I mean, it could trade back down to the 636 area at the bottom of this channel. This could be a 1, 2, 3. But it, could find some support in here. But that's, the trade is here. This is where the money was to be made, not down in here. But let's talk about this as well. As we know, this is the AWX. And this, this had these pops and this pop, and everybody was shorting it and shorting and shorting it, and they were all shorting it on the front side of this move. And then one day it opens up at 20 bucks, and the shorts get crushed. Now, of course, it was unsustainable, and that was all a pump and dump. But that's not the point. The point is that this is the front side of the move. You don't want to short the front side of the move. You're looking to short it when it goes, when it starts to be the back side of the move. In this case, it traded up high as 20. You knew that was unsustainable. But there was another one, KBIO, went to 100 bucks. Guys got just decimated by it. So you have to be very, very careful about shorting the front side of a move. You don't need to short stocks just because they're up. So, anyways, getting back to this intraday, here's the short entry area. Now it's a chase because it's just making lower lows. That doesn't mean anything. And here it is this is another pattern I want to talk about. So this is quite typical of this pattern. So you've got this uptrending channel. It does consolidate, pops out of this channel. Now it spikes up high, but then pulls back really to the breakout area. And this is quite often the case when they're breaking out of a channel like this. This is not bearish. This is just pop, got ahead of itself, it's consolidating, and then I would look to see this thing continue on. And what actually happens then is the trend line changes, and this is not sustainable, but this is your new trend line now, like this, because it's broken out of that last trend. And you can see that it did trade to the top of this channel and is now pulled back. But this is a strong chart. This is not a short chart. If you want to short stocks, I just did a big video on shorting stocks, and I posted 20 of them. And this was one of them here, this TLRD. This is a stock to short. We're short at 26.20. It's now 19.90. It's traded as low as 19.64. That's a $6 move for us on that pattern. This one, what did I do with it? Come on. This pattern is not, this is a very strong, powerful chart. This is not to look to short. Now, and Steve asks, well, how do you determine if it's the backside or not? What you're normally looking for is after 3 or 4 days, the first to make a red candle. And this here would have been an opportunity. This would have been an indicator to short. because this is the front side of the move, and it turns out. But it held support and ended up not being a short. Now it's gone 2 days, so now we're up for 7 out of 8 days we're up. So it's starting to get long in the tooth. Anything over sort of 7 days up, that's getting long in the tooth. But the chart is still very strong. There'll be lots of opportunity to short the stock. I'm just looking for just one moment. I mean, there's a lot of other indicators as well. It's not just a red candle that makes this a short. You're looking at the volume. You're looking. I mean, it did make this red day, but it was on very low volume, and it would have been forming this wedge pattern. I was generalizing when I said, the first red candle. I mean, that's where you want to, that's a good start, a good indicator of where to start, but it's not the sole indicator. You have to have lots of other indicators as well. But so you can see that this pulled back. This was a rising channel. It really was an inside day on low volume. So that's not really a candle that indicates that the run is over. It is a first red candle, so that would be an alert. Okay, this is red on the day. It's been up 4 or 5 days. This might be getting ready to short. But it ended up being an inside day, low volume. And then here you get this next day. It's a spinning top on even lower volume. This is a candle of indecision. So there's no indication that this thing is rolling over yet. And sure enough, the next day, big reversal, kaboom. And then today, this big pop out of the channel and pulling back to support. So nothing in here to indicate yet that this is a chart to short yet. Let's just, I mean, this isn't really a good example of a chart to short because it was such a huge day, but this actually was an area here then below the 6 to short this stock. I mean, if you could have found stock in here, of course, it would have been a wild ride, but I know like Sunny banked big on this. Then this is really a clear indicator. This is the backside of the move. Huge spike up and then closes down red on the day. That's an indicator of the stocks on the going onto the backside. And there was then opportunity to short it here at 6, and it's now 3 1/4. So it's a $3 move. $2.50 move, shorting. You maybe not have caught this big move, but it's not always, how did you know this was going to be the backside, right? I mean, this could have kept going. KBIO went to 100. So this now is the backside of the move, and of course it's just going to continue on down to 0, this stock.